services are not covered by Medicare, especially when it comes to long-term care? Well, here to talk with me about that is Jae Oh, author of Maximize Your Medicare. Jay, welcome.
Thanks for having me, Bob.
Pleasure. So lots of folks are confused about what Medicare covers with respect to long-term care. Tell us more.
A lot of focus is on the fact of what Medicare covers, with not a lot of information about what Medicare does not. And there is this difference between long-term care services over a long period of time. Medicare is not designed as a long-term care approach. Candidly speaking, we have no national long-term care strategy. We'll talk about Medicaid and certain other measures that are done on the state. But what people should know is the fact while the first 20 days under original Medicare can be without charge, that day 21 through 100 has a copay per day, or it's a co-insurance actually per day. And from there, the Medicare beneficiary is responsible for the entire cost of long-term care, which can be a number of years, which is obviously a huge financial burden, perhaps, to certain households.
Yeah. So just to clear up, because there is so much confusion around this, my understanding is that in order to for Medicare to pay that bill, that you have to be discharged from a hospital to go into a skilled nursing facility, or is that not the case?
Part A, original Medicare, it's a very good question here, Bob, because Part A covers the first 20 days at zero charge, as I just mentioned, but only after you are in a hospital on an inpatient basis for 3 days. Now you can see how many complications that are detailed in Maximize Your Medicare, for example, which is that a lot of joint replacement surgeries now are actually happening with a shorter hospital stay or being done on an outpatient basis. So as a result, not covered by Part A at all, even the first 20 days, but instead covered by Part B, where you are responsible for 20%. So this is a big difference, for example, regarding the criteria. Note one other thing is that Medigap doesn't solve this particular combination, but Medicare Advantage can, depending on the plan, who may not require you to be in a hospital on an inpatient basis for 3 days before they begin to pay benefits. It's a nuance for sure.
Yeah. So for the folks who can self-insure the long-term care need, we don't necessarily need to worry about them so much, but there's a group of people who may have to turn to long-term care insurance or Medicaid. Is that the two big options remaining for those who don't have the resources?
I think you've said some of the audience. I would say the overwhelming majority of the audience is faced with the possibility of this very, very high cost matter. Yes, traditional long-term care insurance exists. The number of carriers is limited. Let me just say that since we have no national long-term care strategy, we do have state who understand this matter, because people believe, okay, I'm going to go on to Medicaid, but having to spend down assets, having to only have certain amounts of money in your bank account in order to qualify. And you can see what happens is people worried about losing all of their retirement savings in order to pay for long-term care. And for the state by state, on a state basis, you can understand that this puts tremendous financial burden on the states who are funding the Medicaid system. As a result, you have partnerships between long-term care insurance and the state. In addition to that, just at the beginning, we're at the very early innings, if you will, of states who are beginning to either mandate long-term care insurance, as in the case of Washington State, and slowly but surely other states examining the possibility of doing the same.
Yeah. I wanted you to drill down more on state-sponsored long-term care. But before you do, you mentioned traditional long-term care. There are other types of policies that have sort of come onto the market. There's seemingly more appetite for hybrid life insurance or hybrid annuity insurance or asset-based annuity solutions. Any comment on those alternatives to traditional?
Sure. First of all, on the life insurance, so there have been combinations of life insurance where you can accelerate the death benefit to earlier when you cannot perform a set number of activities of daily living. A couple of very important caveats. Number one is you'll want to understand very well the risk involved, that these accelerated benefits in combination with what is indexed universal life now needs to be examined carefully, because there are certain combinations of situations where you're not covered. For example, in certain combinations of financial market movements, interest rate movements, and then the cost of having these extra features to life insurance. In addition to that, even there are term insurance policies now where you can have this accelerated. Again, you can understand a different risk there, which is an actual date after which coverage immediately goes to zero under term. So yes, there are these extra hybrids, like you mentioned. There are annuities where if people are taking their lifetime income, for example, withdrawals in the form of guaranteed protected income, that there are situations, if you cannot perform these activities of daily living, that you can have enhanced amounts for a specified period of time compared to the guaranteed income that you already expect, basically bumping up that number to a higher number if you can't perform certain activities of daily living.
Yeah. So tell us more about the state-sponsored partnerships. So what do folks need to know about that?
On this, what it basically does is it shields your household assets. For example, let's just say that you had purchased $100,000 of maximum benefit amount of long-term care insurance. Depending on the state, that you may still be able to qualify for Medicaid and shield away the $100,000 in my easy example. Now, again, you'll have to be cautious. I definitely think that, and I'm going to be biased here, I definitely think that you'll want to have a professional here, because there are criteria. It is not as if you can just purchase the cheapest long-term care insurance, because the state partnerships will have their own tailored special set of criteria, so that to make sure that the long-term care insurance that you purchase, if that's the route that you choose, that in fact that it actually also participates in these state partnerships.
Jay, you've done a wonderful job of uncomplicating the complicated. Anything we missed?
Well, I think that in addition to that, what you'll have is you'll want to pay attention to what the states are going to be doing. As we mentioned earlier, Washington State has already, had this period at which they are going to be mandating the statewide program, if you will. It's going to have its detractors. It always does. Anytime new mandatory taxes are introduced, you're going to have a lot of debate. Nevertheless, you're going to want to keep up to date with that, because of the fact that in combination with the many complicated things that I've just mentioned here today, you can see there are going to be different interactions and different choices for consumers as everyone tries to tackle what can only be called a nationwide issue for everybody.
Yeah. Jay, I want to thank you as always for sharing your knowledge and wisdom with us. It's so greatly appreciated. Thank you.
It's my privilege as always, Bob.